free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are big cap stocks going to come back? Chinese stocks are exploding. The dragon has awakened in China. It could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the greatest super investors. All right, everybody, let's get started. Let's talk about the market today. It was a little bit of a rude welcome into October. A couple of things of bad news. Let's call it what it is. We have a strike at the ports, and I hope they sort it out quickly. I hope they really do. I hope the unions get what they need. I hope the ports get what they need. Both sides win. And it was strategic, I imagine, because you have the holidays coming up and it's a good time to go on strike. So hopefully it gets resolved, because it could be kind of a wrinkle in the economy. The economy, based on what the Fed announced, the economy's in okay shape, but it's not in great shape. And I guess a little bit of bad news can cause kind of, the snowball effect. A couple bad things happen. Next thing you know, a lot of people are unemployed. I'm not saying that's going to happen. I'm not hoping that happens. That's just the case. The other thing that happened was there's a conflict between Iran and Israel. Rockets were launched, and that did freak the market out. The only, I guess, wrinkle of positive news is nobody was killed. Good. That's what I want to hear. I don't want anybody to get killed due to conflict. And hopefully that region kind of figures things out and learns to live in peace. But I'm not a political scientist, and I don't run any countries, so I'm just going to stick to stock investing. And then I'm going to talk about Nike at length. I just released a video on the channel. I looked at Nike's earnings, and they weren't great. And I think I was expecting, if anything, they would just be even. And I was hoping they'd show a little bit of growth, but that wasn't the case. It wasn't to be. And oh well. All right, so the markets for day one of October decided to sell off a little bit, and it actually ended up being not as bad as it was in earlier trading. The NASDAQ was down quite a bit, and we'll look at which sectors probably took the brunt of this sell-off. It kind of makes sense that day one, we just ended the first 3 quarters of the year. So a lot of these big investors, hedge fund managers, big money managers can really tidy up their reporting to their shareholders and say, hey, look how good I'm doing. But they could start moving positions on day one. Okay, I want to get rid of this stock. I want to sell off on this. And it's interesting which stocks sold off. Excuse me while I get a drink of water. So the NASDAQ had a pretty good little down day. The S&P went down, and the Dow, which is the 30 biggest stocks, kind of held its own. I'll go over Coinbase a little later. It did fall quite a bit. Bitcoin has been going through a roller coaster of sorts, and that's been the case with cryptocurrencies. I'll tell you about it later. I'm going to get to Coinbase. I'm going to get to Bitcoin a little later. Let me say hello to my friends here. starting with Shadow Guy. Hey, I'm glad you like the intro. Dieter, and I don't know if he's on, but he created it, which was super cool of him. Love the tune myself. What's up, Trader Prad? Very nice to see you. Thanks for joining. And you're watching from the bus on the way home. Sweet. Have a good bus ride, and look forward to your stream later today. And I think Trader Prad was asking for a little volatility. I think the market did him a solid today and gave him, I think, enough volatility. I'm very curious to see what he's going to say tonight. I hope he's grinning ear to ear saying, oh man, I made so much money because the volatility, I used it. I rode some big waves and made some big money. That's what I'm hoping to hear. And I look forward to seeing it at 8 p.m. on Trader Prad's channel. Mike, the dividend investor guy. I've seen you all over the Discord, man. Eventful and troubling for some stocks. I agree. You know, stocks don't give us these beautiful, smooth graphs. Sometimes it's a rough ride. And it sounds like today was kind of a rough ride. But we could crack open some of these stocks and see what's going on. Michael Benitez, very nice to see you. Thanks for joining. And I usually have an account under Carolyn. All right, cool. And looks like, yeah, we got Israel saying they're going to respond. Again, I'm not a political scientist. Can't tell you what's going to happen, but we'll see. And yeah, and I think that war doesn't have implications on oil prices. Oil prices popped up substantially. I hate all the advertising that CNBC puts out there, but they do have a couple pieces of data that I like. So oil prices popped 4% early in the trading day. So that caused oil companies to rise. Oil tends to act as a hedge on the normal market. The normal market's cruising along. Oil has a hard time keeping up. But boom, conflict happens. Boom, 4% oil prices. My Chevron stock popped nicely. And I'm sure everybody owns oils. Stocks saw those stocks go up while the rest of the market was dealing with some down prices. So yes, it does have implications. The location of that conflict has implications. So we'll see how it sorts itself out. I'm hoping, fingers crossed, that they figure it out and we return back to peace. Patrick, good to see you. Not sure that I've seen you on the stream chat. It's great to have you. Welcome. Benitez on NVM. Okay, cool. Trader Prad. The shorts were sick today. Had some fun. Market fear from the war mongering. Yeah, look forward to hearing your stream, man. I want to see how you took advantage. Excuse me. Brad, good to see you, man. Good to see you. I think you're probably a little disappointed that Georgia lost against Alabama. I heard it was a great game. I did see the highlights. I was thinking about you when I saw the final score. Hopefully you guys bounce back, make it into the playoffs, and are in the hunt at the end of the season. Good luck. All right. All right, cool. Good to see you, Patrick. All right, let's get into this. I've got a couple of stocks that I wanted to cover. Nike, Humana, Coinbase, NVIDIA, Apple. But this is your show. So if there's a stock you want to check out, please put it in the chat. We'll take a look at it. We'll crack it open and see what's inside. We'll take a look at the financials and see if it's a good stock or not. But before I jump into stocks, I forgot one little segment. I'm hooked on China stocks. I'm sorry. It's habit forming. It's habit forming when they keep going up. It's almost like that shiny new little object that you get, the toy at Christmas that you got. It's the new toy. It gets all your attention. All the other toys are being neglected because China is working. It's only 2 weeks, week and a half. But holy smokes, man. Babo is up 3.85 again. JD up 5.5. Baidu up. Li Auto is on a tear. What's going on with NEO? NEO's up 1.65. What's going on with Tencent? Up 3.61%. I couldn't resist. I bought further into an ETF in Chinese stocks today. I put $1,000 in. this Alibaba stock, you know, I've had it for a little while, and now it's beginning to move. That's great, and I'm trying to just throw money at this market. I think the China market might be the move that really starts working and keeps working because it was so sold off. The sell-off in Chinese stocks was so massive for 3 years, just undesirable based on the market. And now that the market sees a couple of things, an expensive US market, the valuations in China look pretty good. You got a Chinese government that's all in on making the Chinese stock market work. Bingo. It's like the world really took notice. The investing world really took notice. I don't know that this Chinese trade is going to fade. They're on holiday today, and then up until I think they come back on the 8th of October, which would be the 7th for us, the evening of the 7th. And still the market, went up. So rock and roll. I'm going to follow the China market. I'm going to analyze stocks as quickly as I can. I'll put them on my channel so we know what's up. These are stocks that I'm not going to get many arguments from people that the stocks are not valuable. They're not, their intrinsic value is very valuable. Their fundamentals look great. Usually people have different opinions, which is, hey, I don't want to buy a Chinese company because it's in China and this, that, and the other. And I would say, I get that. But I just remind everybody, when you go into Costco and you look around, you go, wow, look at all these great deals. I'm going to guesstimate more than half of the stuff you're looking at was made in China. And then when you go into Target, 70%, Walmart, 80%. You go to Home Depot, 50% or more. It's just the amount of product that we get from China is massive, and they're getting better. They're making cars that are really competitive, very advanced. They already make all the laptops and all the peripherals. They already make all that stuff. So it's the manufacturing engine of the world, no doubt about it. Having said that, I'm comfortable investing in their stocks, but the investing community has to be comfortable. Without the investing community as a whole, the market isn't going to go. But it's beginning to go, and it's really really going at a high speed. We'll see how long this thing goes. All right, so we talked about China. I'm going to talk about, I wanted to look at Li Auto in the AM live stream, but I didn't get around to it. I think I got distracted, and I want to look at Tencent. So I'll put those at the bottom of the list, and we'll keep moving and check on, let's see here, till the end. Have you checked out IQ stock from China? IQ. I have not. So let me take a look at it. So IQ. Everyday Tech. Go over Micron. Yeah. They had a good earnings, and they had a rally Friday or Thursday. So yeah, we can talk about Micron. And then DRSHF. DRSHF. And then, so Carolyn Robitsky. Okay. Yin. Okay. YINN. Okay. All right. So let's get going. Let's get rolling. I'm going to start with Nike. Nike had an underwhelming earnings report. The report basically shows that their sales went down by 10%. That's a pretty good drop, and I didn't like it. I was hoping that it'd be even, but it is what it is. So having drop in revenue, and I think we're looking at the so the drop in revenue, that was a disappointment. Now they're trying to get the business back on the ground, back on solid footing. They have a new CEO coming into the picture, so they may be kind of just getting rid of all the bad news and setting the the stage for the CEO to have a good run. We'll see. I'm hanging on to my shares. I may even buy additional shares of Nike because I'm buying Nike basically because I think the company is going to be worth more than double its current stock price. When I look at Nike and I look at how the market has discounted it, this is a very valuable company. It's not like they're making terrible shoes. They make great shoes. They make a great product. They have partnerships all over the place. And I don't know that there's a competitor or a peer that can really take them on. And I think they're going to continue to be very, very powerful, and they should do quite well. That story hasn't changed. My qualitative story on Nike hasn't changed. I think it's going to be a couple quarters to get the business right. And then after that, the stock should start working. I'm sitting on a small gain, so it's not like I'm losing money, but it'd be nice to see next quarter. I'd like to see flat revenue or positive revenue. If I see another negative quarter, it'll be disappointing. I'll probably still hang in there. But let's see how Nike goes. I'm buying Nike strictly on the fact that I do believe this company is a very valuable company. It's one of those companies that there's only one Nike. It has no other competitor. It just has, it's Nike, and the second place, peer is way down there. It's like Meta, and then all the other social apps are way down here. So I like that dominance. I think they have a lot of shelf space in department stores. Their direct business is growing. A lot of good things going on. Very desirable business. And I'm sitting on an 8% gain. It'll soon be, 6 or 5% based on overnight trading for the stock is not positive. The stock was down close to 3% when I looked at it after earnings were announced. Now, I'm probably close to even. It's down almost 7%. So that is interesting that the market's selling off that much. So we'll see where it goes. It looks like Prad's going to have a little more volatility to play with. So we'll see where Nike ends up tomorrow. If it opens 7% down, I'm going to buy. The thing that was in their earnings that was positive was they bought back shares, fewer shares in the market. They were more profitable. That's very good. They lowered their inventory, which is very good. They lowered their inventory by 5%, which is very good. So I think the business is sound. They just need to figure out how they're going to start growing. Once they start growing, they're going to be the dominant player that we know. All right. So Nike's there. There's a full video on my channel. If you want to take a look at the full analysis, feel free to do so. My plan is to continue to buy shares of Nike. All right. So looks like I've got a couple comments on Nike. Let's take a look. So Trader Prad. So I get that Kanye went to Adidas, but Kanye kind of, they really dodged a bullet with Kanye West. Kanye West kind of destroyed his business with Adidas. Kanye West is completely untouchable by any firm now because he just went kind of out of his mind. So the whole Kanye West went to Adidas and he did grow business with them. That's great. But it ended really, really badly. And Adidas pretty much got rid of the relationship with Kanye. I don't know what they're going to do with the Easy line, but that's kind of a little bit of old news, right? That whole Kanye West going out of his mind is about 2 years old. So I get that point. Maybe the one thing that Nike, it's incredible how the Air Jordan line has it's so big. And I cannot, walk through a mall or a movie theater without seeing several people with the Air Jordans. Everybody likes the Air Jordan design. They came out with a movie just recently on, Air Jordan. So I think Nike's going to be all right. And it looks like Mike, the dividend investor guy, you have an order to buy Nike if it gets to $74.50. Well, it's moving there. It's moving towards there. We'll see if it gets there. So Brad, you want to look at BWLP? We can look at that. BWLP. Why does that ring a bell? BWLP. All right, so let's jump into BWLP. What is that? BWLP. BWLP. So BWLP Limited is an investment holding company engages in ship owning, chartering activities worldwide. The company operates through shipping and product services segments. The company is involved in transportation of liquefied petroleum gas to oil companies. Okay. So it owns the ships. It's a shipping company for the oil business, the natural gas business. Okay. So company is valued at $2 billion. And the stock was up a lot today, 7%. So over the course of a year, we had, so this kind of business here, they're not completely tethered to oil prices. I think oil price will affect the amount of shipping that happens for these companies, most definitely. But it's not like these guys are producing the oil or the natural gas. They're just transporting it. But if you have high oil prices, the transportation becomes more important because they can get this, from one market to another for customers. And more recently, it's come down. Oil prices coming down. So it came down by 36%. All right. When we look at where they're at, revenue is $3.5 billion. Dividend, holy smokes, 21%. That's a big dividend. Is this a limited part? Yeah, it's a limited partnership. Okay. So just a little extra accounting at the end of the year if you own one of these. It's not overly bad. I've owned these and they do become a little extra work come tax time, just FYI. When we look at their revenue is looking good. So green looks good. Man, that's a lot of growth. So that's great growth. When we look at their balance sheet, let's see, they're a $3.5 billion company. They have $267 million of cash. They have $450 million of debt. So about $150 million of net debt. So I'm fairly sure they're going to have EBITDA that can cover that. Yeah, they really can pay off their debt in less than a year if they needed to. I like their balance sheet, solid balance sheet. I would have guessed, and they probably have some long-term leases on these vessels. And so there's the debt. They don't. They just did it through equity. So that's impressive. So these guys are operating ships. So it looks like they lease the ships, operate them, but they're not putting the ships actually in on the balance sheet. They're not buying them and capitalizing the ships. They don't have any long-term capital leases on their balance sheet. They do have a lot of paid in capital and retained earnings, which means that they raise their money by issuing out shares. And it's this limited partnership is how they got the capital into the company. From a cash flow perspective, how much cash flow are these guys producing? Looks really good. That's good cash flow. It's grown. It's grown from 300 up to 656. The conflict in Israel/Iran, it makes these guys more important because they may have to ship product from one country to another and avoid this conflict area. So these ships become more important, especially as we prepare for winter, because these guys are probably distributing natural gas that gets used for heating and so forth. So that's a very good number, 656. I mean, this company is worth, you know, you could say 6 billion, but it's a limited partnership. So these don't get valued like a normal company. This one looks good. If this is going to do what you want, which is give you very good income, you're buying this stock at a discount right now. There's good upside. I think we're, they're probably going to have good quarters as we prepare for the winter. One homework item on this is see if you can get a handle on the forecast for the winter. Let's ask Meta here. And I'm going to say for Europe. So I want to know, are they forecasting a really cold winter? Is it going to be a warm winter? What are they thinking? And that's something I wouldn't make an investing decision based on this. I would just want to know, is it supposed to be a mild winter, cold winter? If it's a really cold winter, natural gas will go through the roof because there'd be so much consumption, and this company will have to ship product to replenish the natural gas that's being consumed at a high rate. I know that Germany uses a lot of natural gas. They buy it from, I believe they buy a lot from Russia, and they buy it from elsewhere. But that could become a problem because, of course, Russia has a conflict with Ukraine. So this isn't a bad idea. I'm seeing a lot of reasons why this is good. And I'm not, there's a couple of things that I would make sure that I understood before I made this investment, but this one looks pretty good. I like that the stock price has come down. The situation with these conflicts, it's terrible, but it causes the need for companies like this to transport energy. You're basically playing this dividend and saying, hey, if I'm going to earn a yield of 15 to 20%, this is a winner. At that rate, you are doubling your value of your investment every 5 years because they're giving you back, 20% of your capital per year. You'll get your investment back quickly and then still be part of this limited partnership. And in the US, I know there's some preferential tax treatment that the dividends, you got to check your tax advisor, or you can go to Meta AI. How are income so how are income taxes treated, not treated? Hopefully it gets it right for limited partnerships. See, even Meta thinks it's complex. So you got to read through that and understand it, but there is some preferential treatment. In essence, you're one of the owners of the business. And when they distribute these dividends, it's not like ordinary income, which is a normal dividend. Like if, for examples, like I own Chevron, they give me a dividend, that's ordinary income. That's as if I earned it and I get taxed like ordinary income, which is not the most desirable method. If I have a long-term capital gain, I get taxed at long-term capital gains, which is lower. And I think limited partnerships have a preferential way. And, rather than researching it and getting to the answer, I would just leave you with, check that out. If you're going to be interested in limited partnerships, you got to check that out because it does give you, if anything, things to prepare for on your taxes, because they are going to give you this funky 1099, and it's not even a 1099, it's some other form. And literally it's like a P&L, and you have to like pick out the data points and put them in your taxes. It kind of throws, in my case, I use TurboTax. It threw it through a loop, and it caused me to spend maybe a couple hours trying to figure out how I'm going to report that stupid income. So anyway, that's BW. Good idea. It seems like there's something there. You just got to do your homework, figure out how much you want to put into it, and then make a good investment. So everything I share with you is kind of like my observation. I'm not recommending at any point that you buy or sell any stock, but I'm just going to give you my point of view on it. And I appreciate you bringing this company up. All right. So I know the chat's been going crazy. I'm a one-man operation over here. So bear with me. If I miss your comment, I apologize. But I'm going to try to read through and get back to where these comments left off. Looks like a couple people are looking at Nike, trying to take advantage of a quality company coming down to a really desirable price. Looks like Christopher is confident on Nike. All right. If you've been investing for 2 months, I feel like you're doing okay, because you're kind of like right there where it's kind of crazy, right? But once this stock starts going up, in my opinion, it's going to keep going up for a while. Nike is the type of stock that will bring investors in quite easily. Everybody knows what Nike is. Once you start showing growth, that's why I'm investing in the stock, is at some point they're going to start growing and they're going to become a favorite stock. It's one of the Dow components. There's only 30 stocks in the Dow. So we'll see when that happens. I am buying shares so I could be part of that move when it starts going. Yeah, Nike changed. One big thing they changed was they used to, and I could tell, Michael, you've been doing your homework. Good work. So they decided they used to sell through wholesale, and then those wholesalers would replenish the small retailers. And they decided, you know what? We want to change a couple of things. One, we want to have a direct-to-consumer model. Okay, understandable. Two, we're getting rid of that, wholesale channel, and we're going to go direct with the biggest customers. And everybody else, and I think I got it backwards. I think they established a wholesale channel for the small retailers, and they didn't go direct to retailers any longer. So like Foot Locker was left out. A couple other companies that are not gigantic, but it kind of made them, it made it harder for them to stock Nikes. And I think that did cannibalize their business a little bit, because I think the smaller retailers weren't carrying as many Nikes, and it opened up the door for their competitors in the smaller retailers. And I think that was the making of the CEO that's on his way out. So for all I know, they got data internally that says that was a dumb idea. Let's go back to the old way. The CEO that's coming in, he's been with the company for a long time. He's coming out of retirement. It's like, Tom Brady coming back. Come on, let's go try to win another Super Bowl. And they brought him back. So hopefully he has the sense to get the business back on track. Nike got to dominant position, doing some things very, very well. Go back to that formula. There, you got it. You don't have to reinvent Nike. Just get Nike back to what made you dominant. Do that. And hopefully this CEO gets him back on top. Yeah, and I think they have a very strong moat. I would put their moat in fashion and apparel and footwear against anybody. I don't think Nike's brand is second to anybody in that space. It's a brand that, whether you're buying a pair of Nikes for $30 or $300, that brand works. Few brands can say that. There's some brands that are doing well that sell low volume, and they're priced at a couple $100, $150. Those guys will do okay, but they're never going to be anywhere near the scale and magnitude of Nike. Nike is across the board the dominant brand in shoes. So I think that's very valuable. Yeah. So one more homework item on BWLP is understand how they determine that dividend rate. And I think it is a limited partnership. So they would determine the rate based on profits. So it's good to understand, if anything, just to know it. It's kind of like REITs. REITs have to distribute, I forgot the percentage, but it's a majority of their profits of their funds from operations have to be distributed as dividends. Understand how they need to distribute it. And then you can do some forecasting of their business, like, hey, where are energy prices going to go, volumes and so forth, shipping rates, those kinds of things would give you a sense of what are the dividends going to be for the next couple of years. So interesting stock. All right. Man, the chat is going today. Nice work, everybody. Hopefully you guys are following this. And looks like you guys are going back and forth, which is great. Love the collaboration. Yeah, Nike's pushing their website, hard. And I just don't know. Like Apple, they don't sell phones direct. You have a lot of really successful consumer brands that they don't sell direct. You're getting your hands dirty if you really start going direct too much. You're going to have to build a pretty big supply chain in order for you to do that. So maybe the old CEO tried some ideas and he was trying to, create ideas that really weren't needed. But we'll see. We'll see what the new CEO has to say. Continuing earlier, could you give any examples of NMFC's close competitors? Yeah, NMFC competitors. And I'm going to call it competitors / peers. Okay, so all right, cool. So let's talk about NMFC. NMFC. Okay, so we talked about this company. This company invests in small and mid-sized companies, providing capital funding for those companies. As mentioned, there's not a lot of IPOs. So those smaller companies, instead of going public, they're probably getting loans from companies like New Mountain Finance Corporation. So these guys here, Stock Analysis doesn't do a great job of giving peer companies, but you know who does is Meta AI. So okay, so I see one company I'm familiar with, BlackRock. I think a lot of people are familiar with. Yeah, that's makes sense to me. So Ares Capital is in Los Angeles. I've been aware of this company for 10 years, and they invest into businesses like, I bet you they took American. I know that they were an investor in 99-cent stores, and they probably took a bath on that one because that business went bankrupt. But that's what they do, is they provide funding to these companies, and then they own a portion of that company. These are privately held companies, and they're able to invest, earn a good rate of return on the capital, and at times take on equity and own a share of that company. If it goes public, then they participate in the offering of that stock. BlackRock is big. They're probably the biggest company listed here. And they do the very similar to mid-market. So those are the competing companies. I would compare them to Ares. I mean, this is a pretty good list here. And that would be a good place to kind of take a look, see which one's the best one in the pack. And I'll put this on Discord for you. Well, I don't want to do it this way. I'll put it on Discord later for you. And that'd be an interesting list for you to take a look at. And maybe you're onto something, a really good company, but maybe one of these listed here is even better. So those would be the peer companies. And then taking a look at it, I think this stock, the one thing that was interesting was the stock hasn't been appreciating, which is a little weird. You just have a very good rate of return in a dividend, but it's very flat. So why does the market, I would look at the others, like let's look at the other ones, right? It was BlackRock, right? So let's look at BlackRock. You know what? Over here, it's even better. I'm going to compare a couple of these peer companies. So looking at the 1 day, we don't want to go that quick. Okay, looking at the 1 year, it looks like Aries performed the best. New Mountain is a laggard. BlackRock performed very well. I mean, this is a 1 year return. Holy smokes. These two stocks have really worked. Over the 5 year, the story is the same. Looks like Aries is rocking. Very good rate of return. BlackRock is there. And then this guy's a laggard. Why is it a laggard? That question needs to be answered. So, food for thought. I would look at these and see, why are these better? Are they just higher quality? Are they just better run? Do they have better ideas? That would be an area of investigation that I would suggest. Okay, so, but I think the space is good because, again, those IPOs are down and they got to get funding somewhere. They're probably getting it from this space. All right, so Mike, ARCC. So ARCC is, let's take a look at that company. Yeah, so that's the company we're looking at. So this company, wait, Ares Capital? What, did I get the wrong symbol over here? Oh, Ares Management. I think I got the wrong symbol on that. Okay, so I got the wrong symbol on this one here. Okay, so Ares Capital is not doing as well as BlackRock. BlackRock looks like it's the cream of the crop, and New Mountain is still a laggard. It's still not operating really well. We look at Ares, what's it doing? Like, you get a dividend. It has had some appreciation, like 6.5% plus the dividend. You're up to, 15, 16% rate of return. That's good. That's very good. This resembles NMFC. It's kind of flat. So the stock market's not loving these stocks, but BlackRock, for some reason, it likes BlackRock. Now, BlackRock has really grown their business. So what is the symbol? So BlackRock is BLK. So BLK. So these guys have done well. They pay a low dividend because their stock price has been going up. But this one looks to be like the cream of the crop. The markets like this one. This would be like the gold standard in their business, one to compare against. I'm not opposed to like looking at a particular industry or even a micro industry, seeing who's there. And sometimes a stock becomes really expensive and I'd rather buy their competitor. I've done that in industries. Like, I was a United Healthcare stockholder for a long time. I did well, but I thought the United Healthcare stock was too expensive. And I moved over to Elevance, and I'm glad. Elevance has done well. It's a second place operator with a better, in my opinion, better fundamentals and better valuation. So I switched. So government, we don't like monopolies, BlackRock. Oh yeah, watch me. Yeah. Well, I don't know. You should be, they are going to run the way they're going to run, but all you need is a government agency to be really mad at you, and then they're going to throw the resources against you. I wouldn't do that. But BlackRock is BlackRock. They'll do whatever they want to do. All right. So let's take a look at what's the future have in store. I don't know that this is right. I don't think we have futures yet. And right now we can't look at Asia just yet. One, because the Shanghai Stock Exchange is going to be closed until the 8th of October. But Japan, they haven't opened their market yet. That'll be later tonight. We could probably take a sneak peek. Japan was up today. So they did well today. Looks like HSI, is that Korea? They were up. In Shanghai, that's the return from Monday. That's the return from yesterday. So that's kind of going to stay static until next week. So that's going on there. What's going on with oil? This is today's rise. Interest rates went down, and they went down quite a bit. That's 2 days in a row. When this happens, bond values go up. So as this falls very quickly, it's good for the economy. It's bad for income investors because they see less income in the future. So, all right. Yeah, Chinese stocks are moving. All right, so let me go over a couple of stocks that I showed up. Make sure I caught. All right, so let me cover. Let me cover Humana. I know that really was moving. So why did they go down 12%? What was the story? So the market didn't like their offerings for Medicare. I'm not close enough to Humana. I own Elevance. And these guys, Humana plays in the Medicare market, offering Medicare coverage as well as additional insurance on top of that for people that are qualifying for Medicare. So I'd get all over that because this might be an opportunity. This stock has been really hammered. You look at where it was and where it is now, it's 50% off. In 2 years, you get a 50% discount. Let's look at the revenues of the company. So it's 50% off, but revenues have been growing. Well, maybe this is an opportunity. If you have growing revenues, but the stock market doesn't like you, they don't like the type of business you're running. So the profits have been going down. So there's a squeeze on profit. And then free cash flow is negative in the trailing 12 months. It looks very good last year and it looks good for 22. But I think there's some kind of restructuring, reorganization of the business that they just need to process, digest, get through it to the other side, and then show some positive profitability growth, stabilization, free cash flow, and free cash flow growth. They can do that. Maybe this stock really just starts to climb. It's a super low valuation. This is super low. If you look at some of their competitors, like United Healthcare, right? $538 billion. Whew, that's a lot of cap. Elevance is up there as well. $118 billion. So Humana's at 38. They could double because they're down 50%. So if they could just get half of that back, you're up 50%. So Humana, if you study it right, I think it's going to bounce back. They're in an industry where it's not going away. People need healthcare. They're going to need it for Medicare. You're probably going to do okay if you buy at the right time. So yeah, I'm looking at Humana, Mike. I was just showing Elevance, but in United Healthcare, my comment was that the market cap for Humana is super low, and this thing could easily go up 50% in value, and it's only what $17 billion in market cap compared to United Healthcare. It's above 500 billion in market cap. Geez, man, it's hard to grow that number. If you look at Elevance is growing better than United Healthcare, but I'll just use that as an example. The growth here is not sensational. They keep growing, which is good. When you look at Humana, I think their growth was pretty decent on the top line. They just got to figure out how to keep it and have it go all the way down to the profit line. So interesting that sometimes the market just hates a company and just keeps selling it off. It's like, hey, let's just beat up on Humana. I would study it and see if there's an opportunity to pick something up at a really, really good discount. So those are my thoughts on Humana. All right, I gotta get to Li Auto. Got to talk about one Chinese stock, at least one. So these guys are on a tear. In 1 month, the stock is up 47%. Holy smokes, man. That is nice. They're a $28 billion market cap company. They have revenue of $18 billion. These guys do electric vehicles. And look at this growth. Hey, Tesla, Tesla's going to announce their unit sales tomorrow. We'll see what kind of growth they show. Last time, they didn't show growth. They showed that their business is actually contracting. And I can tell you, my theory is that the guys over in China that are making quality cars, selling them around the world, are taking market share away from Tesla and everybody else. Li Auto didn't exist before. It's not a legacy company. They're starting with a clean slate. They don't have a legacy business that is going to anchor them to the past. They're all about the future. When we look at this company, let's take a look at their website real quick. Hopefully it translates for me. We could just look at the pictures. So these cars, I mean, that's looking pretty cool, man. Pretty nice looking cars. And what I would want to see from what I've gathered, the Chinese cars are really working in economies where they are building their middle class. They're selling cars for 10, 20 grand that are decent. And speaking for US companies, they cannot compete in that category. They're like, no, we cannot get down to that level. That's way, way too low. Well, these guys are making it happen and selling a lot of cars, stamping them out, shipping them out. They're figuring out the logistics to get all these cars to the destination. So they have these specially made ships to get them over their destination. China could be like the second coming of Japan. If you go back, I'm going to say 50 years. Yeah, 50 years. The Japanese companies began to disrupt the US car companies with a better car that was made for the times. In the mid 70s, US companies made beautiful cars that didn't care about emissions and they didn't care about gas mileage. So you had these really, really fantastic cars. And Japan came in with a really practical car that didn't burn a lot of gas, that never broke down. And very quickly, Americans said, I want the better car. I want the better product. And we have a right to freedom of speech. We have a lot of freedoms, and we have freedoms to buy the product we want too. That's available in our market. So the Japanese companies just took off and never stopped. And now, I've owned Toyotas, great company, great brand, great product. I've owned Fords, Dodge, I've owned Chevrolets, Mercedes. I've owned a variety of cars. Now, the Chinese could be the second coming of the Japanese kind of takeover in cars, because they're using the new paradigm, EVs, as a reason to consider Chinese car. Like, hey, nobody's got a huge head start on EVs. Yeah, Tesla would claim that. Hey, we got the smartest cars on the road. Okay, I'll give you that. But I'm not going to give you 70 to 100 grand for a car. Not when I can get one of these for 10, 20 grand. And it looks similar. It's not the same product. I get it. But I could buy 2, 3 Li Auto cars versus buying one Tesla. And more importantly, for economies that maybe that family has 10, 20 grand to spend, this is the right product for them. So you see them in Mexico already, as close to Mexico, Colombia, Chile, other places. I think is a great opportunity for China as well as other parts of Asia. This could really go far for China, and they're selling a ton of cars. So Li Auto, I swore off buying car companies. You guys heard me say that. I'm not ready to buy into this company. This is in the yuan, which is 0.14. At that rate, I'm going to guesstimate that this is about an 18 to $20 billion revenue amount for the trailing 12 months. That's pretty fair amount. Pretty fair amount. And at this growth rate, they'll be $100 billion car company in 3 years. They'll double twice and boom, we're there. Okay, you're $1 billion car company. So I think this would be the biggest threat to our friends over at Tesla, who think Tesla is going to keep growing. Like, they're making the cure to cancer and everybody has cancer, which is not the case. Our friends at Tesla, I was a fan. I've been less of a fan more recently. I think 1.37% growth, and they're almost $100 billion company. Li Auto is like, hey man, you keep looking at your rearview mirror, and Li Auto keeps getting bigger and bigger and bigger in their rearview mirror. At some point, they're going to see Li Auto's going to, fly past them and pass them and just be, see ya. We got to 150 billion in revenue before you did. You got stuck at around 90 to 100 billion in revenue. And now we're going to smoke you, because Tesla's had to reduce their prices. They've done that multiple occasions. They're having a hard time moving units. The US car companies are doing a great job. The German car companies are doing a great job. The Japanese car companies are doing a great job with EVs. And now you have the Chinese coming in. So Tesla's feeling it from all directions. Everybody wants to compete in EVs. That is both a legacy car company as well as a new car company. And Li Auto really does show itself as an exceptional company that the stock price is really working now. So really interesting to see. Hopefully this continues to just gather more excitement about Chinese stocks, because it's really hard to ignore this stuff, man. And after that big rise, you still have a PE that's rational, 21%. 21 PE, excuse me. Forward PE, 21%. What's Tesla got? All right, Tesla, you're not growing, and you want me to pay you a PE of 72, and then in the future pay you a PE of 92? You're not growing. You got price pressure. Let's look at your cash flow, Tesla. What's going on with my internet? Come on, internet. All right, so cash flow. $1.7 billion. Wah, wah, wah. Cash flow is going down because margins are going down, because more capital in the factories, because of a lot of reasons. But 1.7 billion is not going to get it done. Not when your company is valued at $824 billion. You should not be valued that high if you cannot produce 20, $30 billion of free cash flow. If you can't do that, go to the back of the line. You don't belong with that market cap, in my opinion. Just look at United Healthcare. I showed that a minute ago. You look at their free cash flow, it's like through the roof. They belong in the 500 billion valuation range. So the auto, man, exciting, very exciting. Let's look at NEO real quick. So what's NEO done in the last month? Oh, it's only up 74%. Okay. Ridiculous. Awesome. Go NEO. Now, this is in US dollars, $14 billion company. Revenue is 8.74. They're losing money, so there's no PE. Okay. They are growing, not like Lee, and this is in Chinese yuan. So I'm seeing like Lee Auto is looking better than this. They're higher in revenue. Market cap. What was the market cap on Lee Auto? 28 billion, 18 billion in revenue. These guys are 15 billion and half the revenue, or less than half the revenue. So Lee looks great. NEO looks good. But the revenue growth is not exciting like Lee. I would study them, if you're interested in this space, I would study both. What's going on with their cash flow? They're not giving me trailing 12 months. So they're losing cash flow. So NEO's losing money, and it's still operating with a lot of excitement, not a ton of market cap. I think Lee Auto is looking pretty good to me, but I think NEO is a little too risky. No profit yet, no free cash flow yet. But exciting times, man. The EV market is competitive. Whew. All right, so Shadow Guy. Thanks, Vic. GL, everyone. Okay. Yep. Good luck to you. Good luck to you, Shadow Guy. All right, guys. So it's been a good stream. I think I'm going to shut it down. I'll be back streaming tomorrow at 6 in the morning. And I'm going to do this stream on Thursday at the same time, which will be 5 p.m. Eastern. And we can get back together and talk about the market. If the market goes crazy tomorrow, I might stream again tomorrow. So if like the market drops, like the NASDAQ drops 3% and all kinds of craziness happens, I'll stream again because this is really interesting to talk about. And I might start streaming more in the afternoons, evenings like this. I think it's good, especially after you saw the market do something. It's good to talk about it. It's also good to talk about, I get my thoughts together in the morning. So when I do it at 9 a.m. Eastern, I'm like, I already did a couple, hour or two of homework, like speaking for this morning. I had already done like 2 hours of homework. I updated my portfolio performance. I had a lot of things kind of well thought out and I was ready to go. In the evening, I'm a little bit like, okay, here's everything that happened. So I'm a little more like loose and frazzled because I'm like, whoa, what happened? And I got all my trades in. I rushed to get that Nike video done. Hopefully you can watch it. Hope you like it. Hope you find it interesting. But I think it's good. I think it's good. I've done live streams in the evening. I think they're good. They're fun. We should do it again. So everybody, thanks for showing up. I got a lot of people on this live stream. I got to keep doing this. Demand calls that I do this live stream. So let's do it again. I'm going to crank up the music again so you guys could enjoy your music is tighter in investing, you'll become a great investor. You'll build wealth. Good luck to all of you. I hope you find some great investments. Thank you for watching. Please consider being a paid member. There's some nice perks, and you can get signed up. Details are in the details of the video. Stocks are really crashing. Putting it on the banner page. Take a look. Become a paid member. Stand up tall. You'll see that you get a couple of perks that I think are valuable, including access to tools that I use. I hope you consider it. Your consideration is appreciated. And I really appreciate everybody's comments today. Cash register. You guys have a good night. And take a gain. Defining when to sell a stock, is a lot harder than determining when to buy a stock. And over time, you'll become a great investor and you will build great wealth, great wealth, great wealth, great wealth.